Hello, everyone. Welcome to the latest webinar from Silver Hill Funding, Q4 Strategies, How to End the Year Strong for Your Mortgage Business. Very excited that you're here to join us. Haven't done a webinar in a while, so really excited to get back into it. Without further ado, I will get us started. Today, we're going to talk about a few things. We're going to talk about the current market reality, broker paths to success in Q4, go over some of our solutions, especially what's working right now and what's going to continue working throughout the end of this year, and give you some important key ways to get started. I want to especially thank everyone who's joining, who registered just this morning with our last minute invitation we sent out. It's really interesting. I know so many of you do your own marketing, so I wanted to give you just a quick bullet on that. Some people from my team just came back from a marketing conference, especially for B2B businesses, and we learned that putting an emoji in your subject line has this weird impact where it really increases open rates. So today my team put an hourglass in the subject line, and we got a very big response. So if you guys out there are running your own webinars, if you're sending product sheets, sending flyers through your emails, maybe thinking about putting emoji in that subject line. You might think it's a little silly, but I think we're in the business of just trying to get the message out there and seeing what works, experimenting. Maybe that's something to try. So anyway, I just want to tell you a little about that. Today, as usual, we are joined by Joe Altamonte and Juan Barcelo. Hey, guys.
Hey, Zach, good to be here.
Hey, hi. Great. One other thing I want to let you guys know, in case you're looking at the presentation, looks a little bit different. We've got really cool new branding for Silver Hill Funding. We're revamping our website, making it more user-friendly for you, giving you more tools to use on our website, slight alteration to our color scheme and logos. We're super excited about this. If you've seen us in person recently at a trade show, an event, you're already seeing this, but you'll start to see it even more on social media, things like that. Again, very, very encouraged by this, and a lot of work, but I think we're really happy with it. So just in case you're thinking something looks a little different and new. So in the news, we've started with this. Most of our presentations this year has been just very volatile, as of course none of this is new, even though each one of these headlines are brand new. Just from a few days ago, you can see now National Mortgage Professional. A news story from Redfin: housing activity plunges reach 20-year high. You can see the headline from Housing Wire. National Mortgage News talking about the possibility of a recession next year. CNN Business, mortgage rates hitting a 20-year high. We know this. This has been a difficult time with rates climbing and with the speed with which they've climbed. And it's made all of our jobs more difficult as we try to provide the same amount of value to our customers and trying to navigate this in real time as it's happening. So very challenging, and that's kind of formed the basis of why we wanted to create this presentation, because especially if you regularly close commercial loans, you know that they take longer to close, and which means that they're in your pipeline for a longer amount of time, and which also means that the work you do now will impact your business a couple months down the road. So we thought, hey, it's October right now. We want to finish the year strong. Everyone does. Let's talk about some of our strategies, some of our tactics that are working well, or that we see brokers have success with now. So that if you think it'd be a good idea for your business, you can get those wheels in motion and start reaping the benefits at the end of the year, or maybe at the beginning of the new year, and help you start 2023 strong. So with that in mind, we put this slide together. How can brokers succeed? I think during these difficult times, these challenging times, which we do see, and it's a bit of a cycle, is that originators, mortgage brokers, professionals who help customers have even more value. And I think it's because you guys are able to provide the certainty during uncertain times. And so in a way, even though it's challenging and rates get higher, it becomes more difficult to do certain types of loans, we have a lot of people out there, investors, small business owners, who more than ever are going to have to rely on your expertise. As a traditionally known as a small balance commercial lender, Silver Hill, we see this all the time because in our world, it always is about solutions, even in no matter where the rates are. With the types of loans we have, the types of properties, the situations, every time it's unique, and mortgage brokers have just incredible amount of value to those borrowers out there to find the right solution. That's important everywhere today, and why we see brokers succeed with us during these periods is because they already have that mindset, and they're able to work with their borrowers and just lean on that part of the value. The value proposition it expands in a way, and that leads me to my next point. How can brokers succeed? Is by doing more of the opportunities that come across your desk. I think with Silver Hill, we give brokers the opportunity to do that, whether that's through small balance commercial loans, which has always been something we've talked about. This year especially, we're seeing many brokers close their first loan with us, and in many cases, their first commercial loan. So we have the expertise to help you do that. And not only that, but we have the tools to make it easier, and we have the communication throughout the process to make it easier. We're going to talk about other solutions we're offering today in that same vein. But expanding your box, learning how to make the most out of every opportunity is just very important when there are fewer of those opportunities, or when fewer of the opportunities that you're used to. Being able to say yes more often, even if it's just something that you can promote on your website, on your social media accounts, like on LinkedIn, being able to say that you're doing this, putting yourself out there more, I think will have just a very positive impact. And again, we're talking about this now. Maybe you're not going to see that loan right away, or you're not going to get it right away, or you're not even prepared to do that today. But thinking about it now, getting the wheels in motion, I think can only have a positive impact later on this year and into the beginning of next. So how does Silver Hill help? If you know Silver Hill, if you've closed loans with us before, I see a lot of people that we recognize on this call today. But if you're new, you might know us through our work with small balance commercial loans, but that's really where we provide our educational value. We provide the education and guidance you need to expand your business with small balance commercial. Sometimes people call it SBC. A lot of originators think it's challenging to close commercial loans, and it can be more complex, but our team makes it easier for you. And so if that's something you've been thinking about doing, one of the cases we're going to make in this presentation is that rates are it's a different story with rates when it comes to small balance commercial loans. We're going to give specific examples, closed loans from just a couple of weeks ago, where you can see where the rates were compared with what the need was for the borrower, and why the broker was able to close that loan, even if the rate wasn't as low as it obviously was going to be in the past. So there's that. We also give you a wide variety of documentation options to solve for common issues. We're going to talk about each one of our programs today. I think the best way to talk about our commercial programs is by the documentation requirements. And we have a full doc solution with our best rate, our light doc investor solution, even our no doc streamline, and our commercial bank statement solution. So within those types of products, I think we're covering the types of borrowers that you see in that space, whether it's a self-employed business owner or an investor, whether we're talking about small balance commercial or 1 to 4 unit investment loans, or what we call and what others call DSCR loans. And lastly, we make it easier to maximize broker comp, and we're going to show that too. By not offering our origination points, we make it easier for you to structure your payment your way, and Juan and Joe are going to show you how that works in just a second. So with that, I'm going to turn it over to Juan Barcelo, head of sales here at Silver Hill. He's going to walk you through our DSCR program, why that's a viable solution today, and why, if you're not already closing DSCR loans with us, you may want to think about doing that, getting the wheels in motion to make that a part of your business in Q4 and beyond. So Juan, why don't you take it away from there?
Well, thanks, Zach. Appreciate it. And thanks, everyone, for joining us today. I know everybody's busy trying to get the month wrapped up here in the next week or so. So thanks again for your time. So yeah, as Zach mentioned, I think DSCR lending has grown in the last probably 12 to 18 months, and definitely seen a cycle change with regards to pricing. Nonetheless, a lot of these loans still there's a lot of opportunity still out there with these loans, because a lot of folks that invest in this type of property, they usually acquire the loan in a bridge or short-term loan, and then they're needing to refinance into a long-term loan now, after their 12-month period is up. Additionally, you have a lot of folks that were doing the fix and flip business, and as sales have slowed down and they look for a solution other than the flip, right? They have fixed their properties, and now they need to get out of that acquisition loan, which was a short-term loan. And so their solution then is going to be, how can I get a long-term loan to stabilize the property while I wait to sell it? Because it's going to take longer and longer to sell a lot of these properties that folks have bought on a short-term loan, have fixed with the intention of flipping it. Something similar, it happens on the commercial side, although it's not necessarily related to fix and flip, but more to just the general product in the commercial world, and Joe's going to talk about it in a little bit. Basically, commercial loans are usually 3 to 5 year terms. So every 3 to 5 years, commercial property owners have to refinance. So despite the fact that pricing is where it is in the market, they're looking at loans that are coming due that need to get refinanced. And a lot of times, especially banks with the small business, with the small balance commercial, banks will not extend or refinance. They typically want to turn over their portfolios. So even though the market is what it is, there's a lot of opportunity still, and I think more in the alternative financing sphere, like small balance commercial and like DSCR. Okay, so let's talk a little bit about DSCR. This is your typical 1 to 4 unit residential investment property, and the DSCR approach is basically, the idea is to underwrite the property's cash flow. So it's really underwriting the property like a commercial property. DSCR is nothing new. It's typically been the underwriting methodology for commercial properties, always really. And that's looking at the property's ability to cover the debt by its rental income. So as opposed to the traditional way of underwriting DTI, where you take a net income and apply it to the personal income and then do your DTI approach, this ignores the person's income. This basically only looks at the property's rental income and its ability to cover the debt. So again, as a result, there's no personal income documentation, right? And it's a much easier loan to underwrite, a quicker turn time, because it's considerably less paperwork. So again, I want to highlight here on the right, the calculation is basically gross rents, over principal, interest, taxes, and insurance. And if there's an association involved, we do condos as well, and condos are typical for this kind of product. Then the association fees included. So it's underwritten like a commercial property, a little bit different because there's less expenses to consider on this type of underwrite. So it makes it a lot simpler to do a loan on a DSCR basis for residential investment property. And to Zach's point and what it says here, it is a commercial style underwrite. And the way we do these loans is like a commercial loan. So they're not TRID transactions. So, the whole 1003 disclosures and everything that comes, timelines and tolerances, do not affect these loans because we underwrite them like a commercial loan. Okay, so that's very important to understand. So what kind of borrowers are we talking about? Well, these are people that you've probably worked with already if you're a residential broker doing their, residential loan. And maybe if you're a commercial broker or have done commercial, you've talked to these people already. So you already really know these guys, right? They're investors that are, moving in the small, typically small property space, doing either single family rentals or they're doing duplex, triplex, fourplexes. And they basically are either fixing and flipping them or they're acquiring them for long-term, stable income. Okay, so these people also, the agencies have restrictions around multiple properties, around closing in a business name. So these are the borrowers that basically are doing these loans. Borrowers that have, more properties that fall outside of the agency guidelines, or borrowers that, most of these investors, they do these loans in a business name for the tax purposes. Okay, not only for liability, but also for tax purposes. They want to create passive income. Typically banks, a local bank, credit unions, they typically don't do this kind of business. This is more of a non-bank lender type, non-QM lenders or, commercial lenders. So you already know these borrowers. And we just want to highlight some of the different profiles. And some of these people may be the same person, right? But some people, have different motivations for doing these loans. And so it's important to understand what those motivations are. So a quick summary, quick view of our program. It's 100,000 to 2 million. Our average loan size here is about 275. We have done 500, $1 million loans. The bigger loans in this range typically don't work because that market rent, on $1 million plus loan, you need the market rent to be 10, 20 grand a month. So there's not a lot of that going on. So the more typical loan size is, average is about 275. We do offer a 30-year fixed program here. It's 30 years fixed, which is typical to, a residential owner-occupied loan. We can do purchase, cash out, rate and term. We do 80% financing for purchases. Refi, cash out is 75% max. Again, minimum FICO 620. The better pricing starts at 700 plus. So, obviously, as you guys know, more restrictions for lower credit scores, less restrictions, better pricing for higher credit scores, typical to what everybody's doing. We can go to a minimum debt service of 0.75. 1.0 would be basically a break-even investment, right? You're collecting enough rents to pay the debt and nothing left over. In many cases, folks buy these properties and they don't debt service. So we can do loans as low as a 0.75 debt service. Prepayments, we offer a 5-year fixed, a 3-year declining, and a 5-year declining. For us, the 5-year fixed is the most popular. People that are going to hold it long term don't mind taking a longer prepayment period. B, we also give a pricing incentive for that. But what you're going to see typically out in the market is your 5-year declining is probably the most common. And then your 3-year, and of course, we're one of the few that offer a 5-year 5% prepay. And again, that's more of a commercial style prepayment than your traditional non-QM residential lenders. Okay, methodology we talked about, it's based on property cash flow. We don't require tax returns. We do offer a buy down of up to 1 point, up to, I should say, a quarter in rate, which would equal 1 point. We can close in an individual's name, but most prefer to close in a business name, but we close them in both. Okay, and this is closed as a commercial loan. Good thing is here too, we can do foreign nationals with this program. So that allows us to help, a wider variety of borrower. Despite pricing where it is, foreign nationals are less sensitive to pricing. They really want to get a loan done, right? In this country, they want to put their money to work, get a better return. than what they're seeing in their country as far as investments are concerned. And then processing fee allowance. Usually our brokers will charge between $500 and $2,000 on a processing fee. And then we don't charge any points. So brokers can charge, 2 points on the front end. They can make yield spread. Again, since these are commercial loans, they're not subject to LO compensation rules. And so we do have brokers that upsell the rate to get some yield spread there. So as Zach mentioned, wanted to show you guys a couple of different loans that we've closed here recently. One is a cash out. And the cash outs that we see, you see these LTVs a lot lower. This house was probably, or this property, I should say, was probably, had no mortgage on it. And the 40% loan to value was for the purpose of reinvesting in another property. We do get a lot of borrowers that they'll cash out an existing investment property and use that money to buy a new one, right, to reinvest. And many times we end up doing the purchase as well, okay? As you see here, these brokers made, a good amount of money on a relatively, smaller loan amounts. Again, there is no LO comp cap because it's a commercial loan. On average, our brokers are making between 2 and 3 points between origination and yield spread possibility. The cool thing, we recently launched this about a month and a half ago, is we're now on LoanX, and you guys may be familiar with LoanX. If you're on the resi side, a lot more commercial brokers are also using LoanX. LoanX is basically a pricing engine where we upload our rates. You can go there and see them. You can go to our website and click on pricing, and it'll take you to the site. You can price the loans on your own. I do always advise, though, you can get pricing on your own, but always check in with one of our account executives to make sure you're getting the optimal price. Sometimes there's a couple different features that you can add to make the pricing better, or maybe the compensation better. So again, this is a do-it-yourself kind of thing where you can price at any time during the day, but always check in with your account executive to confirm that price, okay? So you can price our DSCR loans, day and night, structure the loan, call our AE, very important to help you structure those loans and price them accurately.
Yeah, no, this is a really cool tool. If you're like me, you manage websites, you might manage your own website. You check Google Analytics to see what people are doing on your site. As soon as we put this page up, it became one of our most popular pages right after our home page and our about page. This is where brokers are spending a lot of their time. And just like Juan said, you could use it at any point. I've heard salespeople say that some brokers like to do it together on the phone. Like, hey, they call up their account executive and say, I'm going to run this right now. Let me know if I'm doing this right, or if there's anything else I should know. It can work that way too. I think it's just really helpful to have it there. And I'll show you later on in this presentation exactly where to find it on our website, but it's right up front and center. We gave it its own menu item. So it's really easy to find at this point, no login necessary to see this quick quote tool. Pretty easy to use. So definitely want to recommend that, and we'll throw that link up again later on this presentation. So thank you, Juan, so much for that. We're going to turn it over to Joe right now to talk about diversifying with small balance commercial. Maybe you've seen Joe just yesterday or today. We were recently at some events. So if so, hopefully you got to connect with him. Joe travels a lot and meets with a lot of great people and tells the story of Silver Hill, and we really appreciate that. So thank you, Joe. And if you are ready, you can take it away.
All right. Thank you, Zach and Juan. And I will say that this is a really good segue into another avenue where you can diversify. So it makes sense that when you're a residential mortgage originator, that you would expand into some investment type of products like Juan just outlined. The next step is not that far away, small balance commercial, especially when you're talking about the 5 and over units, because those are some properties that many of your real estate investors you already work with will move into. So Common borrower needs when we talk about small balance commercial borrowers. Many borrowers need, are investors and they or business owners or both, but they need cash out in equity from their existing property to improve their current properties, so or to improve their business. So, and this, when you consider a commercial loan, it's considered more of a business expense. So sometimes they don't want to tie up their house with their business, and this is a good way that they can do it. So our cash out policies are a little bit more lenient than you might find with a business loan, or that you might find with a bank when they do cash out on a commercial property. I mean, technically speaking, we can go up to 75% LTV with a cash out loan, depending on the borrower's credit and the property type. So again, if you're a business owner looking to improve your business, or if you're an investor looking to buy additional properties, that could be a good reason to borrow. Juan mentioned a lot of times with commercial loans, they're typically short-term loans. It's much less common for a lender, a commercial lender, to do a 30-year fixed term, but we have the ability to do that. So as these properties keep coming due, rates aside, they're going to need a solution. And when you see some of the rates on these deals we're talking about, I think you'll agree that we're not clobbering people over the head with our rates. They are reflective of the market, but they're still reasonable, especially when you're coming out of a short-term loan. Self-employed entrepreneurs, if you see me, I have air quotes up. They maximize the tax code, so they need another alternative to things like the SBA, as you see there, things like your bank with a full doc solution. So as you'll see when we go through our products, we're definitely giving them a wide range of solutions. So what is in it for the folks on the phone call? And we have quite a few of them. Well, as a commercial, this might remind you of the good old days back prior to 2008, when you can make money in a number of ways, rather than the comp structure you might be used to with some of you that are primarily residential mortgage originators. Number one is we can make in total up to 5 points. Now, we don't see that very often, especially in today's market climate, where you're trying to do best by your borrower. But on these harder to finance projects, you do have the ability to earn what you deserve in certain areas. So we can allow originators to charge up to 3 points protected on the closing sheet that comes out of the proceeds of the loan, as well as earn yield spread if you're able to sell a slightly higher rate up to 2 points. So those combinations will get you to 5 points. But typically what we see is, around 2 to 3 points, and it's a combination of both. The other thing I will say about that is just a piece of advice, is that even though we do allow yield spread, and you might be able to make up to 1 or 2 points, be careful not to put all of your eggs in the yield spread basket, because all of our loans have a DSCR requirement. And so if that becomes an issue later on in the processing of the loan, the value comes in low, the rents, the income doesn't look like it did before the loan was processed. First thing we will do is try to improve that DSCR by finding out ways we can lower the rate. Yield spread's probably the first thing to go. So while if you can sell a higher rate, that's awesome. Make sure that you are charging at least a little something up front, so you're not stuck volunteering your services. And also for you, Zach's team is awesome at helping you market to your referral network. So you can get some unbranded flyers, social graphics, and promote your business. And these things will work as you make them borrower facing as well. So this is a great overview of our small balance commercial guidelines. We do both investor and owner occupied. And when we talk about owner occupied, we mean that they occupy the business inside. So keep in mind, even for DSCR and any kind of mixed use property, we cannot finance a property if they reside in it. So just keep that in mind for small balance commercial and our DSCR programs. Number of different loan terms that we've discussed. Anywhere between 15 and 30 years for amortizations. Pretty aggressive on our LTVs, still up to 80% on the purchase. We like to see better credit. So even though we don't go down to a 650, I think you'll find that, if you at least 700 and especially over 750, 760, you'll start to see the rates get a lot more favorable the better credit the borrower is. I think our average credit score is up in the high sevens. So the prepay options, the way to address that, because we have a lot of different options. Of course, the more severe the penalty, the bigger break on the rate. But the way to handle that, especially if you're not used to selling commercial loans, is rather than just lay the options out there and say, here's your rate, here's your prepayment penalty, get an idea of what their plans are for that property. If they're looking to get out of there in 5 years or even, sooner, okay, maybe we do a little bit shorter of a prepayment penalty. Keep in mind that's going to be reflected in the rate. If it's somebody that's moving their business to a new location, it's their dream location on the corner of Main and 5th Street, and they want to have that business there forever, you can offer a little bit longer prepayment term because that's going to give them a better rate. So, keep those things in mind when you're talking to them, that it's better to ask what their plans are than it is to just lay out options in front of them. So again, DSCR is the underwriting methodology. We're more concerned, or mostly concerned, with the income of the property, not necessarily the income of the borrower. So the borrower can be them, them as a person or the entity. And we do also allow buy downs. So you can buy down a point. You can buy down the rate by 3/8 of a point for 1 point. Also, different programs that are involved: full doc versus light doc investor, a no doc streamline, a bank statement. This all has to do with their ability to provide documentation. So rather than, again, lay out the options and try to figure it out, by quizzing them, it's good to say, hey, where have you been? Where have you tried to get this loan done? Well, I'm talking to you because the SBA was a real big pain in the butt and I didn't want to have to show this, that, and the other thing. Then you can start to think about, okay, is this a bank statement loan or a light doc loan because they're an investor, or is it even a no doc streamline because they didn't have bank statements or tax returns that were going to look good? So again, pretty much products for every type of borrower out there. The common thread for all of these loans are solid properties and strong credit is what we like to see. Speaking of the property,
Joe, keep going.
Okay. Yeah, and I'll pop it to you when I go through the properties real quickly. But speaking of the properties, I would say that if you see the eligible properties on the lower right side of the screen, rule of thumb, stick to those properties. Anything outside of those properties is a likely no. And I'll talk about some of the more common ones, but our bread and butter, mixed use, multifamilies, that means 5 or more units. But again, Juan outlined our 1 to 4 unit DSCR solutions. Office and retail are a higher tier for us. We will do restaurants and bars. Just keep in mind, we're not financing the business or the liquor license or the furniture, fixture, and equipment. Self-storage and mobile home parks are attractive properties for us because they generate income. Keep in mind, it's the entire park. We're not putting liens on the individual, mobile homes, especially since we don't want our collateral to drive away. Automotive, right? Repair. We do not do gas stations. And daycare centers. Just focus on the property if you run into a daycare. Make sure they don't live there, because a lot of folks that run daycare centers can run them out of their homes. So if they live there, that'll disqualify them. We're really talking about a commercial property that's used as a daycare center. So I mentioned gas stations. We also do not do churches or special use properties like bowling alleys or things that can only be used for one thing. That makes them hard to remarket if we should come into possession of them. Healthcare. We'll do a dentist or a doctor's office, but we won't necessarily do an overnight stay or a home that patients stay overnight. So keep those things in mind. And hospitality is a common one that we get asked about that we can't do. We don't do raw land. We do not do construction. So those are some of the more popular ones. Zach, you wanted to chime in?
Yeah, sorry about that. I was just going to launch off what you said on property types. Just how we were saying earlier about strategies in this time of year and this current market. When you look at those property types and think about who the borrowers are, we highlight owner occupied as an option here. Think about who's like running a restaurant, some of these other property types you offer, and the needs that they have, like for a cash out in order to improve the business, things like that. It's less to do with where the market is, where like a residential homeowner is going to refi just because rates are so great. Like we're not seeing that today, but these kinds of needs still exist regardless of where the market is. And so I think historically, that's why commercial has still been a viable opportunity for originators, even when the market turns a bit, just because like the needs of the borrowers go beyond that of just getting the best rate available. So I think you can kind of get a sense for how that could be when you see the office spaces, retail, restaurant, bar, like the automotive centers, the different various property types for people running businesses, and they have different needs and needs for your solutions as originators. So that's all I was going to say.
Amen. And take a look at some of these things. I mentioned daycare center, pretty chunky loan for a daycare center in Belford, New Jersey, $470,000. We're keeping it real. We're showing you the rates here today because that's just reflective of the market. But again, I wanted to highlight that rate at 8.25 is pretty competitive. Number one, not far off from the banks in today's market condition, maybe a 1 to 2 points higher at this point. Broker made a nice little payday there on a $470,000 loan, so about 2 points or so on that particular loan. Nice property. Again, for daycare, keep in mind commercial, and $470,000 loan that broker may not have ordinarily done if not looking to diversify his business. Same thing with the warehouse in San Leandro, California. Really low loan to value on that. $750,000 to get some cash out of the property. So rate even more competitive, 7.25, and the borrower made 2 points on that. So nice payday, and not getting greedy on the comp, and still making a nice payday. Same thing with the restaurant, $420,000 on a cash out refi, and a rate of 8 7/8. So you see some of these things that have been closing within the last month or so at our company that the brokers, supplementing or complementing, or certainly supplementing their income on. And you see these are solutions: cash out refinances, purchases. So right now that's the majority of our business. And think about it this way too: you're not seeing the rate term refinance is in the residential world today. They're certainly slowing down in the commercial world, but Juan brought up a great point. Many of the loans that folks have on commercial properties are short-term loans, hard money loans, bridge loans, and they need to refinance. Sure, they want the lowest rate they can get, but in the absence of 15 other options that they might have if it were a house that they lived in, they're going to take, they're going to agree to terms on a loan that looks a lot like these, because it's certainly a favorable loan compared to what they're coming out of. So keep that in mind as well. Rate term refinances are not dead when it comes to commercial programs because of the fact that they're oftentimes in a shorter term loan.
That's a great point. This next slide that I have, I talk to the sales team members all the time here. Our account executives learn about what they're doing and the conversations they're having. And one thing I'm hearing recently is that there has been an increased interest in our commercial bank statement product. So I wanted to highlight, 2 very recent closed loans a couple weeks ago here on this slide, some of the specifics about the program, and then open it up to, Juan or Joe to highlight a little bit about why this particular solution is making sense and give some additional color there. Just want to kind of give the spotlight for bank statement for commercial.
Yeah, I'll speak a little bit to it. I mean, it's we've seen in the last couple of months, we've seen a lot more interest in this program. And my guess is just different reasons for it, but it's an owner-occupied product, so it's mostly focused on small business owners that need to refinance for either working capital to reinvest in their business, to buy inventory, to hire people. So different reasons why, and it's just a much easier underwrite than what a small business administration loan, SBA loan, would be. And despite the pricing where it is, it's much lower than using a credit card for a business credit card or any other kind of business loan for the same purpose. So they're realizing that, hey, refinancing on our existing property or even purchasing a property is much easier using the bank statement product that we have, which, by the way, there's nobody in the market that's really doing anything on the commercial side like this. So commercial property for owner-occupied businesses, small business owners, are typically, bank style underwriting where, you do take tax returns and you're looking for a net income of property of the business itself. And so, as you guys know, most small businesses, they don't really show a net gain due to tax reasons, right? So with this bank statement product, we don't really look at that. We take into consideration the actual cash flow of the business, right? How much in revenue is going into the bank account, and we take out the expenses that are going out, and then whatever's left net is what's used to basically cover the debt. So we've had a lot of success over the last, I'd say, 3 or 4 years since we came out with this product. And recently it's really picking up. So, as you guys know, I mean, the market affects us all equally. Banks are, becoming more tight, more conservative around lending to small businesses. And so this kind of opens up that opportunity. So again, we've seen a lot of recent, gain on this product and a lot of interest in the market for it. So a lot of our brokers are closing deals with a bank statement commercial loan for an owner-occupied business. So good stuff here. And again, as Zach mentioned early on, in a time where the market is volatile, there's a lot of uncertainty, and folks look for alternative sources. It's good to, as a residential broker or even a commercial broker, if you've never done an owner-occupied loan, that is a small business loan, this is a great product to kind of get you into that business and to, diversify your revenue streams as brokers.
Cool. Thanks so much. That's really helpful. So getting started, we're going to make this quick. Give you just 3 things to do, and you can do them now in anticipation for the rest of this quarter. If anything we've said sounds interesting or something that you might want to do, here are just kind of 3 ways to get started. I think all pretty straightforward. What I'm going to tell you about is how to price out that 1 to 4 unit investor, that DSCR deal on our website. How to enroll in our free course to learn more about commercial lending. This has been a very popular course that we've rolled out this year. Just hundreds and hundreds of enrollments, and I think it's been valuable. And then finally, how to connect with an account executive if you don't already have a relationship with an AE here at Silver Hill. So instant pricing, this is your quote tool. This is the website, big and orange here, silverhillfunding.com. My team has recently updated our menu in order to make it very easy to see. So you can see that red circle, price DSCR. DSCR is the name of our program, 1 to 4 unit investment deals, as we've been talking about, and you'll get to a page and see that quote tool. So we'd love to see you try that tool. Let us know how it goes. As Juan was saying, it's good to do and then right before a call or during a call, but it's a good resource to have to help your conversations. And also if you're just working at night or something and you need that information, easy to get it on demand. So make sure you give that a shot. I can tell it's popular because, as I said, I look at the web pages people use, and this is our one of the very top ones, and we haven't had it for too long. So that's been very encouraging for us to see hopefully you find it helpful too. Our masterclass program. Now, this is really cool. I think my team's done a great job of producing a lot of content over the years. But you know, you really have to hunt. It can be difficult to hunt around for content through blog posts, through articles, through advertisements, all these other things. We've put our best material together in one easy to digest email course. So if you go to that webpage there, you can sign up. It's totally free, of course. And what happens is every other business day, you just get an email from Silver Hill with the information. It's like a blog post or an article sent through an email in your inbox. Nothing you have to, no live event, nothing you have to make time for. It's on your time. And these are each of the modules below. As you can see, it's a pretty in-depth course, and I think a great starting point if you don't really know much about commercial. Of course, you know, connecting with an account executive is another great way to learn, and just you know, keeping up with our posts, our webinars, and things like that. I'm hoping is very helpful for you as well. But this is a really good way to get started on your time. So again, totally free. No pressure, obligation, anything like that. Just sign up for it and take advantage. I think you would find it helpful. And lastly, connect with an account executive. My hope is that everyone on this call here has someone they know, a person that they're able to talk with at any time. But we know how it is. Sometimes, you know, you've done commercial in the past, you stopped, maybe you've done it somewhere else, not with us, or you know, for any number of reasons, you may not have an account executive that you know today. We really want to fix that. So you can go to our website using that link. You know, look where you're located. You'll find contact information for an account executive. Another way is to contact any one of us, which will give you our information at the end of this presentation. And we'd be more than happy to direct you. But we want to make sure you have someone to talk to. 'Cause that's really, you know, that's what it's all about. Relationship business here. We really want you to have someone at Silver Hill that you can trust with your deals. So ask that you do that too. I think we're at the end here. I just want to say, I don't typically say this on the calls, but as I thank Joe and Juan, but you know, in times like this where expertise really matters, I think it's really awesome that they make the time to do these webinars. Joe and Juan, such experience in the small balance commercial space. I think when there's so many new things out there and everyone's trying to find the next thing to do, and there's a lot of uncertainty, it counts for a lot to deal with people who know what they're talking about and are true experts in whatever field it is that they do. I'm just a marketing guy here, but Joe and Juan are true experts in small balance commercial. They've taught me so much. I think they'd be really happy to teach you as well, to help you if you're experienced, just to move your business forward, close more deals, even in these kind of challenging, difficult times. I think it's really great to stay involved with Silver Hill and work together with us as we help you grow your business. So hopefully that's the takeaway you got today. You can see Joe's information, Juan's information, our general contact information, giving you a lot of ways to connect with us. We hope you do that. I don't think we said it yet, but we'll send you this presentation tomorrow, the video recording, through email. So don't feel like you had to keep track of the notes, because we'll make sure you get it in your inbox as soon as possible. Joe, Juan, anything else you'd like to say before we close out?
No, I'm good. Thanks a lot, Zach, for putting this together for us. We really appreciate it. And thanks to everyone else for their time. And Joe, thank you for your time as well.
Yeah, thank you guys. Zach, you made us blush over there.
Well, you know, that's my job. No, everyone, thanks so much for joining us. Have a great rest of your week, a good end of the month, and we hope we can talk to you very soon. All right, have a great day. Bye.